Okay, this is my first attempt at trying to make a video of exactly what it is I look for when I trade. I'm a better trader than I am a video maker, but there's a reason for doing this, and that is to explain my trade plan. Hopefully you can see my mouse here, and we'll get started. What we have here obviously is EMAs. This is a 200, this is a 50. I believe this is a 21, a 14, and a 7. We don't pay a whole lot of attention to these for entries, but use them for exits, and they kind of help show us how far out of whack things are. For instance, up here, you see that by the time it reaches this point, it's quite a ways away from the 200, so then it pulls back to the 200. This yellow line right here is central pivot of daily pivot points. Apparently I can still communicate. As you can see, here's your daily pivot. There's the first pivot, there's the second, and then this is kind of like where if it gets this far, it's almost has to turn. Don't pay a whole lot of attention to these other than in Forex, because if I can come up with a good example here, we zoom out. If you notice, every one of these central pivots gets hit just repeatedly. There, here, even after a big drop like this here, it comes back to central pivot and so forth. Now, this here missed by a little bit, but I still consider that a hit. When I place a trade for Forex, I don't put my take profit right on the yellow line. Now, this is during the election right here, and we missed the pivot. There is like a 99% chance of it hitting the next pivot the following day. The individual, I can't think of his name, he's a pro trader, guru, whatnot, that showed this how to use these pivots, showed that there had only been once since like 2008 that it misses 2 days in a row. So technically this here's a miss, and you see we're starting to get some flattening here. Things in the election are slowly getting normalized. We don't see too much craziness. So you can pretty much figure that Sunday through Monday's pivot is going to be halfway between the high and the low. Although how you figure that is high, low, and close, and divide by 3. So central pivot is going to be somewhere right in here. So obviously, probably about right there. So probably you can pretty much figure that it's going to get hit again. We go back here to Nas100. I primarily trade the 5-minute chart and use the what is it I'm trying to say? Like I say, the EMAs are more for closed than they are for open. I'll try to explain what happened here. This is where I made my big mistake Friday. As you can see, right here, right about here is where the market opened, and most market opens, don't ask me why, but it's like sellers or traders come in, they sell off all their held overnight positions, and then they wait for a dip to rebuy. I made money going down here, and part of it was greed. Part of it was if you stare at a chart long enough, you can find entries everywhere. And what I was looking at was, even though stochastic was laying on the bottom during this candle, in TDI we still had a slope here in the green one and the red one. We also had not matched the previous low, so I thought maybe we would get one more push. It was silly of me to even try and take this trade. It was like trying to capture that last 10%, because as you can see, we had a wick here, and we shouldn't be trying to match long wicks. We should try to match consolidation areas. So I entered, went somewhere right in here where this pulled back to, and it popped down and went back up so fast that I couldn't even close for any profit. And when it went up, one of the things that I like to do is I'll wait till it starts crossing EMAs again. One of my major closing points, had this been a buy, would have been as soon as it hit or crossed this little 7 EMA. But as you can see, it ran up to it and then came back down, and I felt, well, you know, maybe this whole thing was a false breakout. And so I stayed in, and I really get burned by this next candle that happened almost all at once. So as soon as this crossed, I put in 2 long positions and closed the losing trade. The losing trade was, I believe, whoops, this is the wrong account, I can't show you. The losing trade was around $10,600. But these open trades, these open long trades, I held on to till we got up around here and closed them for 14,000 and change, closer to 15,000 in profit, thus eliminating this 10,000 here. Now, one of the things, well, here's another reason for closing. Now we see stochastic is maxed out, and let's see if I remember right, the blue line goes up first, obviously, and then when you get both lines converging up here, it's definitely time to get out. One of the things I watch for from Oliver Perez, he has a trade plan that says anytime the 21, he actually likes the 20 better. I don't know why. It's not that big a difference. But anytime the 21 is above the 200 and price is also above the 21, this is when we should be looking for buy trades and buy trades only. And you can see there is some validity to this, because here we have a hit to the 21 and it takes off again. This might have been a place where I would have put a pending buy order for when it crossed there. Although TDI and stochastic didn't really show anything. I think I did over here when stochastic got near the bottom. I did play in this area here some and take another good ride up. Let's see. And then as we're getting towards the end of the market, being that it's Friday, and we know a lot of traders close at the end of the day, even more close at the end of the week. So I started looking for reasons to sell in this area. We see the red and green line crossing below the yellow. The yellow starts sloping. But I don't like when these lines get outside these two bands. Now, right about here, as you can see, it started up again. And I think I might have taken a small trade there and closed somewhere in this area, even though that broke my rule of, well, Not really, because of now prices below the 21. I think right about in here is where I would have entered. But with the lot size of '02 that I'm required to use only because I'm supposed to be using consistent lot sizes, um, we can see that price is trying to head back into the bands. So somewhere right in here I would have entered and rode it up to the yellow line. But these two here are pretty much what I use. These indicators are together are just golden. And then, like I say, the EMAs are primarily for confirmation. I'll also look at market structure. We see this whole chop area here is also meeting this chop area here. We have multiple areas of convergence. Um, so you can almost figure that other people are watching this and thinking the same thing I am, and thinking somewhere right in this area is going to be a good time to re-enter buying. With earnings reports still coming out, I'll look to see what companies are projecting earnings and what they expect those earnings to be. I don't put a whole lot of faith into them, but we're getting near closing time. It's 3 o'clock. I see a big green candle and then some pullback, and it comes back up. The bottom of this candle matches the top of this candle and starts going up again. I'm trying to say that this kind of tells me that there may be people that are buying a particular stock that has earnings coming out and are planning to hold it only because of the earnings report spike. I don't play this game a whole lot. It depends. Now, if it's a Google or a Facebook or Tesla or one of the majors, I might, because these candles will be a heck of a lot bigger. And a lot of my trades in this time may only last a couple of seconds, 15 seconds. I don't sit in here and hold them. I will place a trade and immediately come down here and put my cursor on the X button, and as soon as I hit profit, I close. I don't worry about, it's got to get to this support level or resistance level or above an EA or Um, stochastic still has a way to go. Um, a lot of my trading is like that. Um, my primary goal is to profit on every trade and take what the market is willing to give me. For instance, over here, I told you that I might have placed a pending order right here on this yellow line, and once price broke it, I see that we're hanging right around the same level. So and uh, it's I see that we're still way up here in stochastic. So that tells me we do not want to hang around in this trade. So we place a pending order here, and we get this big pop, and my finger's on the button, and I close. Uh, Pretty much same thing at this hit. Um, if I would have entered here, I probably would have closed at the top of this candle, because usually um, when something like this happens, it's anywhere from $1,500 to $3,000, and to me, that's good profit. Um, the problem I'm having, and this is for the prop firm that I plan to send this to, is I can't trade like this with fear. It's very hard to trade with fear, and that fear comes from having the uh, drawdown limits. Uh, they're causing me to panic, and uh, let's scroll back here. Maybe I can find yesterday's. Okay. Like we had this. This would have been an example. Okay. Market opens. Now don't go by these times because the times aren't right. But let's say this was market open. Market comes down, we get this big huge spike, and then we get some retracement. We go up here, and then we get a pullback. Okay, this pullback area pretty much matches the consolidation area over here. We got a nice little pullback. Then we got what's very close to an engulfing bull candle, and so then we, it's kind of hard to say for sure what happened here without going to the 1 minute. But once we had this bull candle, I would have been expecting that it was going to go up again. So, and it did. I mean, it ran clear up here. So when this thing started up, I would have been late to the party, but I probably entered somewhere right in here because stochastic is laying on the bottom. And then we get this pullback. Well, pullbacks aren't bad unless you have a daily drawdown limit and you're going, oh my God, I can't hit that. So you hurry and close when it gets back down here, and the thing turns around and goes right back up. Or it dips even lower. Well, now you're really in trouble. So instead of getting 10,000 or more dollars in a win, you end up losing uh, four to $8,000. And so how do you eliminate this? Well, the correct answer is if you want to stay within your budget, let's say, which is your daily drawdown, you use smaller lots. Psychologically, I am having a big problem with doing the same type of trading with smaller lots. I keep wanting to take more. Yet when you sit here and you go, okay, we got this big we're pulling we've pulled back. Next candle drops down in here and it goes up and it hits this line here and you're like, okay, I'm going to close. I'm in profit. I got to close. But you look at it and you because you've only used a 0.25 lot, you hang on to it too long. So what happens? As soon as you start seeing a little pullback in here, oh, I got to get out. I got to get out. I got to take that profit. So you take your profit, and instead of making all of this, you take like $150. And when you do this repeatedly, over and over and over, you you you, you start seeing, my gosh, if I just would have used bigger lots, then I would really be up. But then when you use bigger lots and your entry's off by a little bit, like I just finished explaining over here, then you're forced to get out. Now, this is my personal demo account. As you can see, it's $181,000. We go to account history. We pull up. Date 10/29 to the 6th. So 7 days, I've made $81,000 by not trading in fear. So you can't tell me that my trade plan doesn't work. And let's see. Let me check my calendar here. So, yeah, we even had a weekend in here. So basically, what did I say? 7 days? In 5 days, 7 days minus the 2 days for the weekend, I made $81,573. So like I say, my trade plan works. I just cannot trade in fear. And this is the whole point of this video. Call it psychological, call it what you want, but I don't know what else to say other than I can do this. It's for some reason I just can't scale it down. But I feel like if you would just take that doggone daily not daily, because in an aggressive account we don't have daily stop loss, but that 10,000 overall loss is the part that is causing this fear, and it's caused me to blow up my account twice now. I went ahead Friday and traded the blown account after I blew it up, and after that point I made over $15,000. That was after the $10,000 loss. So basically I made $25,000 in one day. So I'm asking for either a bigger stop loss, not stop loss, drawdown of the account, or removing it altogether. I appreciate you watching this video. I'll now have to figure out how to upload it and get it over to you. I didn't mean for it to take a half hour to record, but thank you very much. And